Hi there and welcome to this video. My name is Andy and this is trendfollower.co.uk, and in this video I'm going to have a look at the different asset classes that I like to track each week and decide whether I want to be invested or in cash. So follow me through. But before I start, a quick disclaimer, of course, I'm not a financial advisor, so please don't take this as financial advice. It's just what I do, so regard it as entertainment. Now, if you want more information about how I do my trend following techniques, then go to my website. This is the website here. Click on this little drop down menu here, and when you see the drop down menu appear, click on how does it work, and if you input your name and your email, then I will send you a video, a 25-minute video that gives you all the information about how I go about my analysis of the different asset classes and how I decide whether I want to be invested or whether I want to be in cash. So I'm not going to spend time on this video talking about the technique particularly. I'm going to go straight in and start to talk about the first asset class, which is shares. And to be exposed to shares, I use actually a unit trust, the Fundsmith Equity Unit Trust. Its ticker symbol is this, and the green line is the average for the past year, the 52 MA. I look at things once a week, so 52 weeks in a year, of course. This black line is the price, the closing price of the unit trust at the end of each week, and you can see that this week it closed up here, which is an all-time high. So I'm quite happy to stay invested. Basically, I stay invested until it closes below the average for the year, so it's pretty straightforward. So I'm staying invested in shares. Property, I have my property investment divided into two lots. Half of the property investment is in an investment trust called the TR Property Investment Trust, whose ticker symbol is TRY, and this has a mix of both UK and European property. It's been very choppy in the past year or so, but I had a buy signal. Here you can see where I got in. It's been rising nicely in recent weeks, although this past week dropped back very slightly compared to the week before. Not really very much change, but well above the MA52, so I don't need to do anything at this stage, so quite happy to stay invested. The other half of my property investment is in an ETF run by iShares. It's a UK property ETF. It's basically a fund of funds, so lots of different property exposures within it, and you can see where there was a buy signal, a sell, and another buy signal. You can see the price I got in at, and recent weeks it's been a little bit choppy, but this last week rose to a newer high for 2017. So that's good. So that seems to be rising, so quite happy to stay invested there. And the next slice of the pie is gold, and to decide whether I want to be in or out of gold, I use the ETF PHGP, which is gold priced in sterling, and you can see how it's been doing very well until last week, where it fell right down and produced a sell signal. It had closed the week before just above the MA52. With the benefit of hindsight, I now wish I'd closed at that point, but of course I didn't have a sell signal until the week before last, and then I did get a sell signal. So sell I did, and then of course what happened this last week, it's risen a bit. Not very much, but it's just annoying nevertheless. I'd be much happier if the price of gold went down, and then if it came back up through the MA52 at a lower price, then I'd be rebuying at a lower price. Now, who knows, that might happen, but of course it may just spike right up again, triggering another buy signal. And this is the difficulty with trend following, is when things aren't trendy enough, then the trend follower gets chopped sideways in and out of the market, getting hammered each time with a buy and a sell that doesn't go anywhere, and it can be very frustrating, but we'll just see where it goes. Commodities is the fourth slice of the pie, and I use the City Natural Resources High Yield Trust, CYN, for exposure to commodities. And during 2016 I got a buy signal down here, and I invested, and it did very, very well. It went up about 30%, and then in recent weeks it's been falling, and then a couple of weeks ago it triggered a sell signal, and I sold just here. It's fallen down quite a bit further. This last week it came up a little bit, but I'm glad to be out of the market. But interesting point here, trend following, one would never get the whole change in the trend. So it changed from a downtrend to an uptrend. Ideally, of course, I would have got in here and I would have sold here, but that doesn't happen. So I've got the middle part of the trend, and that's what happens nearly always for a trend follower. When trends start to change, you don't know they've changed really until they go significantly the other way. So I use this average price for the year, this moving average, the MA52, to decide whether the trend has changed or not. And it probably doesn't matter too much what trigger I use, as long as I use a trigger. But of course, down here, I don't know that the trend had changed. With the benefit of hindsight, that was the low point. That would have been a good buy point. But of course, it may have just gone down further. All these points at the time look like good buy points. But I have to use something that tells me that the trend really has changed. By which time, of course, one has missed the early part of the trend. And it's the same is true when exiting a trade. I'm never going to exit at the top because I think it's going to keep going. It's only when it comes down to a certain point that I get a signal to close, and that's why I get the middle part of the trend, and that's it. So that gave me a 25% gain in the investment, which was great. But the full change in price from the low here to the high here was 70 up to 140. So actually, it doubled in price. Now I didn't get that 100% increase in price. I only got 25% of that. But that's the way it goes. 25% is still a good number in my book. Okay, bonds is the last slice. I don't trade bonds because they chop in and out around their 52 MA too much. So I have 3 different bond funds. They're all ETFs, different denominations, pounds, euros, and dollars. And I don't even look at the graphs of these. I just keep them, and that's that. So looking at the traffic lights this week, shares are still on a green, so I'm still holding on to the Fundsmith equity investment. Property, both of my property investments are looking positive, so they're on a green. Gold, the price is still below the MA52, so it's a red light. Ditto for commodities, a red light. Bonds is always on a green, using the technique that I use. So I don't have to do anything this next week. I shall just have another look at things in a week's time and decide what to do at that stage. If you haven't had a look at my website, please do visit trendfollower.co.uk. Have a look around. I'll do another video next week and catch up with you then. So thanks for watching. Bye for now.